What's going on, everybody? Hope you're having a great week so far. It's James, and we are back in the Edge Finder. We're going to be doing our top buys and top sells of the day. And let's go ahead and get right into it. I'm going to leave the indices and commodities in here, but I am going to remove our neutral biases so that we can see all of our buys and sells. So here are all of our buy and sell signals that we currently have listed in the Edge Finder. And we have one clear, strong favorite on the buy. It's USD CAD with a score of +8. And we have two strong sells that are tied, Aussie NZD and GBP NZD, both strong sells with score of -9. So if we're doing top buy, top sell, it would make sense that we look at USD CAD in one of these two. However, I looked at USD CAD in yesterday's news video. So if you want a full in-depth breakdown of USD CAD, I took a look at the chart as well on TradingView. Go check out yesterday's video and you can get the full in-depth breakdown on this score of +8 here, USD CAD. So I'm thinking maybe Euro JPY and one of these two here. Only because I could look at New Zealand CAD, but then we would have New Zealand in both a buy and a sell. And I think it's beneficial to kind of get an overall view of all of the different numbers, GDP, inflation, unemployment, interest rates, COT data, retail sentiment, all of those numbers for 4 different currencies.
Are you brand new to trading? Do you have a strategy that's not going so well and maybe you think you need some help, or maybe you just don't even know where to start? Well, lucky for you, A1 Trading has a trading help desk. All you have to do is fill out this form. At the bottom of the form is a list of things that you might need some help with. After you select that, we'll send you an email with a playlist of free videos from our YouTube channels, some tips on where you might want to begin, and even examples from our in-house traders and what they do in these situations. We'll even give you a peek at some trading tools that we provide that could help. Use the link in the description, the A1 Trading Help Desk. Click that link and get started now.
Generally speaking, when we're looking at the 2 different pairs, we have 4 different currencies involved. So just getting a broad overview of all of those numbers. So Euro JPY and let's do Aussie NZD. So normally I start off with the buy. I'm going to start off with the sell today. So we're going to start off with Aussie NZD right here. Tied for our strongest sell, score of -9. All of our metrics right here are in the negative, but we're going to start off with COT data and retail sentiment. Both have scores of -1, and we can take a look at our sentiment section right over here. Institutional traders both favored long for the New Zealand dollar and the Australian dollar. However, we don't actually score something to be long or short until it crosses a 60% threshold. So because the New Zealand dollar currently sits at 58.31% short, that's technically only, 8% above a 50-50 level. And so until it crosses that 60% mark and over 10% or 10% or more of the institutional traders are favoriting it one way or the other, we're not technically going to score it long or short. So this is still sitting kind of neutral, 41.69% long, 58.31% short. I mean, yes, technically there is a very, very small favoritism on the short side, institutional wise, but not as much as the Australian dollar, where only 32.09% of institutional traders are long on the Australian dollar, and 67.91, nearly 68% of institutional traders are short on the Australian dollar. So that is showing clear favoritism, clear bias on the short side here for the Australian dollar. Retail sentiment, on the other hand, retail traders are 96% long and 4% short on the Aussie NZD pair as a whole. So retail traders, no trouble making up their mind there. Seasonality comes out to a score of -1, and in our last 10-year average and last 5-year average, it's pretty clear to see that we're sitting below this neutral line right here, meaning that historically speaking, in the month of December, this pair does not tend to do very well. That was the case last month as well. We can look at the month of November and see that historically speaking, again, in our last 10-year and last 5-year average, this pair doesn't perform very well in the month of November. And that was the case with our current year average. That's the case this month so far with our current year average as well in the month of December. And in fact, even going all the way back to October, we can see that the 10-year average is below that line. The last 5-year average is pretty much right on the line. And our current year average was sitting right on top of of the last 10-year average. So really, I mean, honestly, any way you look at it, when you're looking at the seasonality, this pair has been performing pretty much exactly how you would expect, historically speaking, just falling right in line with our historical data. Our trend reading is a score of -2, and that's really obvious to see right here. Ever since November 29th, all the way down, it's just been continuing to make new lows, continuing to shoot downward, and our price forecast is saying that is definitely still going to be the case, and fundamentally that definitely looks like the case. Our fundamental section here, GDP growth, inflation, unemployment, and interest rates, all scores of -1, meaning that the New Zealand dollar is beating out the Australian dollar in all 4 of these metrics here. So GDP growth for Australia 0.6% compared to New Zealand's 2%. Australian unemployment slightly higher than New Zealand's 3.4% compared to 3.3%. Same with inflation here, slightly higher, 7.3% compared to 7.2%. And lastly, Australian interest rates are lower, 3.1% compared to 4.25% interest rates for the New Zealand dollar. So any way you look at it, this pair, historically speaking, does not trend well. Our retail traders are going long on the pair. Our trend reading is showing a downward trend, and the price chart makes that really obvious to see. And fundamentally speaking, this pair is very bearish. So definitely looking like a strong sell here. What was the other pair we said we were going to? Euro JPY. Euro JPY was our strong buy. We said we were going to take a look at strong buy score of +6. COT data is a score of +2. Retail sentiment is a score of +1. Take a look at our sentiment section right over here. Institutional traders pretty heavily favored on the short side when it comes to the yen, 79.16% short and only 20.84% long, and they are favored long on the euro as well, 67.10% long or 67.1% long, 32.9% short on the euro. Retail traders are going short on this pair, 62% short, 33% long. Our seasonality is also a score of +1, and we can see that in the last 10-year average and last 5-year average, both of those are sitting comfortably above this neutral line here, meaning that historically speaking, in the last 10-year and last 5-year averages, this pair does tend to trend better in the month of December. However, so far that has not been the case in the current year average. That was the case last month, it looks like. The last 10-year average sitting above that line, last 5-year average pretty much right on the line, but it did do better in the month of November. Same with October and September. So there is still time for this pair to turn around, and if it stays at this strong buy signal, it certainly could turn that around and pop above that neutral line right here. It's just barely below it. But moving on, we see our trend reading is a score of +2, and we've had, ever since December 5th, we've been making some nice moves to the upside. Nothing too crazy, but price forecast does predict that that will continue to be the case. And lastly, our fundamental section here, GDP growth and interest rates coming out to scores of +1. The only thing dragging this pair down right now is that inflation and unemployment are scores of -1. So fundamentally speaking, this pair is kind of split. Let's get into the numbers right over here in the fundamental section. Euro GDP growth 0.3% compared to Japan's -0.2%. Euro unemployment 6.5% compared to Japan's 2.6%. Euro inflation 10.1%, pretty high compared to Japan's 3.7%. And euro interest rates were actually just raised up to 2.5%, most likely to help curb some of this high inflation, bring it back down. So 2.5% interest rates for the euro compared to Japanese interest rates currently at -0.1%. So there we go. I'm going to go back into the watch list one more time just so that you can see these buy and sell signals and see how we score them right here, just in case you would like to take a look at it. Hope you guys enjoyed this video, and we will see you in the next one.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.